Welcome back to MMG Invest. Let's do a quick market update. First of all, this is not financial advice. I'm not a licensed financial advisor. I'm not your licensed financial advisor. This is just me ranting and talking about trading and economics, and I could be completely wrong. Do not invest anything you're not willing to lose or lose sleep over, and have stops in place, emotions out. Alright, so I talked about the stock market melt up, right, for the past few weeks and months because the Fed is trying to get in front of a recession, so they are already talking about cutting rates. They stopped raising rates a while ago at the beginning of the year, and they can't normalize rates after a decade, which is not normal. It's never happened. Usually when this does happen, dollar's gonna really take a hit. So Jerome Powell, the Fed chairman, today testified in front of Congress, where you have Congress for politicians grandstanding and asking stupid questions so they look good to their constituents, their voters. But that's not important. Whatever the politicians say, that's, it's a circus. But whatever Jerome Powell says about fiscal monetary or related things, right, is important because the markets do listen. So I didn't watch it because I literally cannot. I don't have the time sometimes, and I just don't want to listen to politicians say incredibly stupid things. But I did read up on some analysis and articles and whatnot. So I will cover what Jerome Powell talked about, and then I will look at some charts afterwards. And yes, gold shot up today. So Fed Chair says risks of trade policy uncertainty and slowing global growth are rising. So they're pivoting, and they're going to, the Fed needs to shift the blame from themselves, and they're shifting it to global slowdown. And they're also going to shift the global slowdown onto Trump and the trade wars, when in reality, the global slowdown was happening with or without the trade, tariffs, wars. Not that they do help, but it was going to happen either ways. And that's mainly because of all of the central bankers in the world, especially the world reserve currency and the Fed, right? So it's centralization and artificially low interest rates globally is what's creating the global slowdown. It's kind of like a Japanese style stagflation. But yeah, I mean, the tariff wars with China, it doesn't help. It's just what Trump needs to do to try to get some sort of trade balance, which isn't going to work either. So Powell noted that while the U.S. jobs market remains robust and consumer spending appears set to rebound, business investment has slowed considerably along with housing investment and manufacturing output. So manufacturing output and business investment is a big deal. Small businesses is the backbone of the U.S. economy and global economy. It's not the big corporations, guys. It's the small businesses, your mom and pop shops, or even mid-tier businesses that hire anywhere from like a couple people to maybe a couple hundred people, or even a couple thousand. But that's the backbone of every economy. But regulations and taxes destroy them. And so does monopolies. And the monopolies are the big corporations on the stock market that also create barriers to entry with regulations because they lobby politicians, and then they could afford to undercut their competitors, the small businesses. Okay, let's read what else is here. Our baseline outlook. This is Powell. Our baseline outlook is for economic growth to remain solid, labor markets to stay strong, and inflation to move back up over time to the committee's 2% objective. First of all, I've gone over this 100 times. Inflation's way over 2%. Everyone knows and feels it. It is year over year. But the way they do the numbers since like the early 1990s, they fudge the numbers as well. They make the numbers, the inflation numbers. All right. So Powell said in prepared remarks. By the way, why is their target 2%? Has anyone asked the question? You could say that you want it to be 2% for two reasons. One is so the U.S. is competitive trade-wise, because if the dollar's too strong, you can't sell goods abroad. But unfortunately, the U.S. doesn't make enough goods to make money abroad. Okay, so that's wrong. Two, when there is inflation, there's rising wages. But that's only when your economy is productive and you have high savings. And the only reason that ever happens is because of their business cycle and their manipulation of the interest rates, which should be not manipulated, but controlled by the free market. And that's the interest rate on all debts, credit card, home mortgages, student loans to cars, and loans to businesses, right? However, uncertainties about the outlook have increased in recent months. In particular, economic momentum appears to have slowed in some major foreign economies, and that weakness could affect the U.S. economy. So pivot. A rate cut in July is now all but certain. Aberdeen Standard Investment senior global economist James McCann wrote, "The strength of last week's jobs number did lead some to think that the Fed may pause for thought. It's clear from Powell's testimony that they won't." So, right, there was strong economic data Friday, but watch them. Next month, they will change the numbers, because they could do that. They always go back and revisit and change it. So I don't even know why it's so important. There's an element here of the Fed wanting to take preemptive action, he added. From an inflation perspective, the picture certainly seems sour enough to warrant a reaction, but from a growth perspective, there's nothing in the data that suggests a rate cut is strictly necessary. Right. Technically, the economy's booming, it's the best ever, and it's strong, that's what everyone says. But just in case, we're going to cut rates because of the global slowdown. That's the narrative. In reality, they're cutting rates because the economy is in reality slowing down, and if the stock market dumps too much, they can't stop it. That's what I think. That's what I personally think. And then shit hits the fan. And there's so much debt out there, if the market falls, like literally another 20% or something, these debts are all going to start defaulting. There's already major defaults in the private sector from student loans to car loans, and credit cards. It's going to start increasing. And they know the real economic numbers, and they know a recession's is coming. It's hitting. And they're getting in front of it. So what they're doing is they're going to juice up the stock market, they're going to print more money, and they're going to lower rates so the interest isn't high, so less people default quicker. Because if the interest rate keeps going higher, and then the free market will push up the interest rate despite what the Fed does. But the low interest rates for the credit cards and all that for the private sector, they want to keep them artificially low so people keep paying them. Because if people stop paying them, boom, a recession, right? And people stop shopping, and then the earnings come out and they're weak, and corporations miss earnings, and then the stock market starts crashing, and that's how the dominoes and the house of cards fall. So they're going to keep cutting rates. They're going to go negative rates, and it's just to keep the system moving and to keep the money flow moving and to keep the public ignorant to the fact, so the public keeps buying. Because again, the US is not a manufacturing country. It's a service sector country, and that's another reason why we're in such debt and deep shit. All right, so they just want to keep the momentum going in people's psychologically. It's a con game, right? Confidence game. And they want to keep everyone spending and paying the debts they owe. And they know that the economy can't handle any more rate hikes. So, and they can't even handle the 2% interest rate we're at right now. So they're stuck. They're screwed. They have to lower rates. All right. The Wall Street Journal. Jerome Powell's congressional testimony live. Okay. So I'm just going to talk about these headlines, and I'll give you guys my thoughts. And I'll post these in the chat groups. Maybe I'll post this one in the comment section below the video. A deeper look at the Fed chairman's testimony. Stocks touch highs as Fed chairman wraps up Hill visit. So stock market hit new all-time highs because of the rate cut. The rate cut's positive for the stock market. That's a given. Bank of Canada holding rates steady. By the way, let me go back to this. So stocks did touch all-time highs. The major indices did. But the FANG index and most of the smaller to mid-cap stocks, they didn't really rally. So it's what makes me wonder is hedge funds or some entity is buying the indices, the major, like the S&P 500 and all that. But the underlying stocks didn't really rally all that much. They did, but nothing crazy. All right, Bank of Canada. What I'm trying to say is they're buying ETFs in derivatives, in futures. It's not so much the underlying companies. Bank of Canada holding rates steady, says it's closely watching global trade. Bank of Canada, they're going to cut rates as well. They left their benchmark rate unchanged at 1.75%. That's what their interest rate is. Ours is like, I think it's 2.25, maybe 2. I forgot. It's below 3. Powell leverage lending doesn't... Okay, Powell. Leverage lending doesn't present financial stability risk. Leveraged lending? I don't know. Sounds pretty risky to me. If you're lending out money that's leveraged. So if that money... So if someone defaults... I mean, you literally go bankrupt. Because it's leveraged. So you borrowed money to lend money to someone else. I don't know, guys, but I have one credit card for emergencies. I don't even borrow money on credit cards. I mean, this is Keynesian. We live in a very special time, and I mean special. Leverage lending is very risky. All right, Fed Chairman Jerome Powell urges Congress to raise debt ceiling. That's the first time, I think, for a Fed chairman to give his opinion to Congress to raise the debt ceiling. So there's this thing called the debt ceiling, which is put into like the Constitution, which is supposed to not let the government spend beyond its means and spend its citizens' future away on unnecessary spending, like, I don't know, welfare, warfare, and free entitlements and shit they promise that they can't pay off, right? So the debt ceiling is there to stop the government from spending because it's not supposed to spend recklessly. It's not supposed to max out credit cards. But, you know, here we go. They're going to raise the debt ceiling. I'm sure they will. But first, you know, the left and the right, they're going to argue and, you know, make a big deal out of it. And try to show, you know, one of them's not going to raise it. And then, like, the lefties aren't going to let the debt ceiling be raised. People are going to get fired, or people are going to get put on leave. Government employees are going to get put on leave, unpaid leave. But, you know, of course, when they come back, they get paid for the time they weren't even working during the entire argument on Capitol Hill. So it actually costs more money when they don't raise the debt ceiling. So the bartender pressed Fed chairman on inflation. So the Phillips curve in a question for Fed Chairman Jerome Powell about the surprising coexistence of low inflation and low unemployment. Mr. Powell said that the relationship between economic slack and inflation, which was once strong, has weakened to the point it's a faint heartbeat. He added that the Fed has learned in recent years that the sustainable unemployment rate is substantially lower than we thought. Asked whether that might allow for policies such as higher minimum wage or expansionary fiscal policy that were once thought to drive higher inflation, Mr. Powell demurred. All right, let's get something straight. There's much more employees right now that have like a part-time job or two part-time jobs. So inflation, there is this thing called wage inflation, where employers keep paying where the employers can't find employees because there's no supply of employees or skilled workers. So what they do is to entice people to be hired or to hire new employees, they raise the wages. And then people go out and they obtain the skills so they could get those higher paying wages. Well, we don't have that anymore because people are stupid and they go to college. But and they get worthless degrees. But also employers aren't paying higher wages because they don't have to. We have a globalized economy, right? And they outsource these wages all around the world. So, yeah, wages don't go up. So the government's going to force companies to pay higher wages. And you're thinking, well, that might be all right. No. For one, it destroys any jobs for your high schoolers and youth who need to obtain some real life experience, right? Instead, they go to schools and go get in debt. And that's why you have like full-grown adults working at fast food joints all across the nation and being bartenders and like this one and being, service sector waitresses and this and that. These are jobs that are supposed to be for like teenagers, guys. That's how it used to be when I was growing up, at least. When I was growing up, I found jobs like it was nothing. Like I worked at like 3 fast food joints and landscape, Anyways, also, companies can't pay any higher wages because they're not getting the productivity from the people, from the employees. And yes, there are some shortages in niches for welders and machinists, this is what I did in the military. And I could always fall back on generators, mechanics. I know how to fix cars and trucks. I also did that in the military, but I also did that as a hobby growing up. Machining and welding and all that. Although there is 3D printing coming out. Anyways, and a lot of things are going to get automated. But this isn't going to work out. You can't... So what she's saying is you could print more money and we could force companies to raise their wages. So that's a double-edged sword. One will... companies' revenues are going to drop. They're going to hire less people. They're going to automate. And then the other consequence will be, well, higher inflation means that people won't buy things anymore. And they will only buy the things they need. So your expenditures, your what is it called? Your expenditures for things you don't need, things you like and things you just want, like luxury stuff, or not even luxury, just TVs, video games, I don't know. What do you guys buy for entertainment, for fun, And people are just going to stop buying less of those. So that's this is what socialism looks like, all right, guys? It sounds great, but it always does the exact opposite of what they promise. And then it's going to kill more small businesses. Education is the answer to inequality, Fed chairman says. Well, education's great if you were getting real education, not what the universities are pumping out right now. Because universities are like satanic, like Marxist indoctrination camps. So the type of education people need is, I don't know, carpentry, fixing things, working on things, building things, entrepreneurship, my opinion. But, this was a grandstanding question by probably a lefty. There is no inequality. People don't care. Like, companies will hire anyone. Like, if a company could pay less to someone, like a female, than a male, but the female does the same amount of productive work as the male, then everyone would hire females. Or anything else, right? So the free market would balance itself out. And then they would get raises as they advance in their career. How common sense is that? Why won't he just say something like that? Because, everyone's biting their tongue. Because of the system. There's a price to pay for high U.S. debt, Fed chairman says, but when is hard to say. So, well, yeah, when, well, the price to pay for all this debt will be either bankruptcy or default or hyperinflation. And when will that be? It's hard to say because he's an idiot and he doesn't know, but he should know because he's in charge of monetary policy, right? So, but I think he's honest. Listen, I actually do think he's honest because he knows he's playing with fire. He just doesn't know when the fire... He's like the guy who's pouring gasoline onto a fire. And the idiot doesn't know that the fire is going to run up the stream of gas into the gas can, and then it's going to blow up while he's holding it, right? So, but he doesn't know how far he could stand away from the flames before the fire runs all the way up into the gas tank. It's my analogy I just made up. So he doesn't know how low he could push rates and how much money he could print before all of a sudden inflation runs out of control and then they can't stop it. That's pretty much what he just said. And he doesn't know how much debt before the bond market blows up, China sells its trillions in U.S. Debt, and so does the rest of the world. He doesn't know, but he's going to push it, as long as the world accepts it. But, the world is really de-dollarizing and moving away from the SWIFT system really fast, guys. Really fast. It's like every week a new country. We've got China, Russia, creating their own system. They're talking about back to crypto gold. They're talking about all kinds of things. So they've been preparing for this. That's why their central banks are buying up gold and silver, in the, on the down low, on the hush hush. So is the Fed. No consensus on economic impact of $15 minimum wage, Fed chairman says. No consensus. That's like saying no comment. I don't want to talk about this. Because he can't say the truth that it'll destroy small businesses. Because that's exactly what it will do. That's why McDonald's, Amazon, all these big corporations, they're all for the minimum wage. They're like, yeah, we fight injustice and in all this. In reality, these corporations, they could take a hit of $15 minimum wage, but they know that their competition, all of the small restaurants, all the small tech companies, all the small entrepreneurs, and all the small, tiny mom and pop businesses cannot handle a $15 minimum wage, and they will all go out of business, and then their monopoly just keeps on growing and growing. Also, McDonald's, they're like, hell yeah, let's have a $15 minimum wage. And they'll fire half their staff and replace them with automation, which they're already doing. You're starting to see kiosks everywhere, right? You go to any grocery store, there's 2 tellers, and it's self-checkout. You guys see how this works? All right. Congress has got your back. Lawmaker tells Fed chairman. Yeah, Congress, let's print money till infinity. It's the easy way out. That's how they could promise all their voters free shit. It's yeah, we'll give you free money. It'll be worth nothing in the end, but we'll give you this, we'll give you that, and then by the time you get it, it's worth nothing. And then 10 years later, you're going to pay 100-fold for it because inflation, because a loaf of bread's like $20. Carton of eggs is no, it's not, it's already $5. It's like $10. Well, organic's $5. All right. So, Fed chairman, no evidence of hot U.S. labor market. Oh, it's not hot. It's not heating, overheating. There's no such thing as overheating. What is overheating? Labor market overheating? The economy's booming too much. I've never heard of this. This is the... Oh, man. I swear, if I ever could just speak for 10 minutes to the world, I would destroy everything. That's why you guys need to share my videos. All right, Fed Chairman Jerome Powell cites Japan as cautionary low inflation tale. So Japan doesn't have super high inflation. They have stagflation, where the inflation is pretty stagnant, right? It keeps going higher every year. Sort of what we already have right now in the U.S., where it's like, I don't know, 8%, 10%. And there's just no economic growth whatsoever. Matter of fact, it's just slowly deteriorating. Things do look a little better because of technology in Japan, right? Things, it grows a little bit, but once the next economic global monetary crisis hits, Japan's going to tank with the rest of the world, and they're going to get really hit hard, especially with their elderly population. What size could July rate cut be? Fed Chairman demurs. I think it'll be a 0.25. It might be a 0.5. We'll see. The bigger, the higher the stock market's going to go, and gold is going to shoot to the moon. It's already shooting to the moon right now. If it's larger than a 0.25 basis point rate cut, it's really going to take off. Analysts on the Fed chairman's comments, July interest rate cut is a go. Yeah, we all know now. Fed Chairman Jerome Powell says June jobs report didn't change his outlook. It's because it's fake. Fed Chairman says he has serious concerns about Facebook's Libra. I talked about Libra, and I said, I'm surprised that they talked to the Fed and they're just okay with this. Because if Facebook could do it, anyone could print their own money. That's in direct competition with the Fed. I don't think they're going to let this Libra thing really happen. They might, but with some serious constraints, but they shouldn't. But, guys, I posted in the chat groups, Book of Faces, they do have ties to government, in intelligence agencies. So, no ma'am, Fed Chairman Jerome Powell says he would not leave if President fired him. President can't fire him, and this is just grandstanding. By the way, I will talk about how the Fed, the central banks all around the world are becoming controlled by governments. But they always were. It's just more obvious now, which is very, very frightening and bad. Lawmakers welcome for Fed chairman, thanks. Okay. So that's pretty much it for that. All right, so here's another article. Let me talk about that. It's looking more and more as though the days of independent central banking are truly over. In fact, after Turkish President Recep Tayyip Erdogan fired his country's top monetary policy. Basically, I'm going to post this in the chat groups. What it's saying is, like, a lot of countries are taking away the independence of their central banks from the government. Now, that's horrifying. And here are all the countries currently. The United Kingdom. Okay, let me start from the top. The United States right now, with Trump. Turkey. United Kingdom. The entire Eurozone. Italy, Slovenia, Latvia, Lithuania, Greece, Sweden, Swiss National Bank, South Africa, India, Argentina, Mexico, Pakistan, and I think that's it. So globally, and China is totally in control of their central bank, right? So that's nothing new. And so is Japan. Japan's central bank has bought like 660, some crazy amount percentage of their entire stock market. So what does this mean? Well, governments know nothing more. All governments do is spend money. That's all they do. They promise free things, politicians, so they get into power. Then the governments just spend endlessly because of lobbying. They give free money to corporations as well through grants. Literally every FANG stock, every 500 Fortune company, Tesla, you name it, you just give them free money, taxpayer money. They bail out banks, right? And they fund militaries that are just out of control, like take control, all sorts of agencies. You have tens of trillions just going missing in the Western world, and it's just mad. It's just insane corruption and endless spending. You'll get like endless welfare. You'll get endless, you name it. Just, I mean, you guys know. Maybe they'll start handing out checks, right? $2,000 to everyone every month. And that sounds great, doesn't it? Yeah, well, if everyone gets $2,000 for free every month, that $2,000 will be worth nothing because inflation will go through the roof. So it's pointless and stupid. That's how you get hyperinflation. That's beyond helicopter money. That's just like, that's Zimbabwe, Weimar Republic, it's Venezuela. It's worse than, it's literally that. All right, so yeah, I mean, that's really all my opinion, and that's what'll happen. So buy gold and silver, buy them stocks, guys. You can do great. That's my opinion, not financial advice, but I'm just giving you guys all the evidence of my thoughts. All right, let's get into some charts. Stock market went higher, all-time highs here, which is, it's weird how TA works, even with the news and fundamentals, right? Huge cup and handle, still breaking out, higher it goes. I did say there was going to be a pullback. I was expecting it to at least pull back to 2,900. Now, can it still pull back to 2,900? And yes, I do think it might. And I'll talk about that in a minute. Dow looks just like the S&P. The volatility index VIX is like all the way down. There's no volatility right now. 10-year treasury still at 2%. The dollar is at the 97 handle, but I expect that to at least fall back down to 96. It has to. I don't know how the dollar is going to keep rallying with all this news. I'll talk about gold in a second. Let's look at the FANG stocks. FANG index. So the FANG index is still on hitting resistance right here at 2,650, let's say. And it's pretty overextended on the daily here. It's overextended on the daily. On the 3-day, it's on an 8 count, so maybe 3 more days of upside, but I expect a pullback on the FANG stocks. So if the FANG stocks correct, the Nasdaq's definitely going to take a hit, and it'll affect the S&P 500 as well. Let's take a look at the weekly on the FANG index. The weekly's on the 4. So, a pullback. I'm not saying there's going to be a crash or a huge correction. I'm just saying some sort of pullback, maybe that'll only last like a week or something. And then higher we go. And that'll be because of the Fed. So that'll be on the 27th, the end of this month. Today's the 11th, July. All right, let's take a look at the Russell 2000 smaller mid-cap companies in the U.S. It's also hitting up against resistance. It's tested this resistance 3 times now, kind of 4. So I expect you test resistance. The more you test it, you're going to break through it, like my trampoline analogy. First time you jump on it, you put a tear in the trampoline. The more you jump on it, you're going to break through it. Well, that goes for support and resistance. The more you hit it, the more likely you're going to break through it. The daily... it's overextended, so a small pullback, right? And then we're going to probably rally back up and break through it to the upside in the coming weeks. So, like I'm saying, guys, towards the end of this week or next week, I expect some sort of pullback. Nothing significant, just a pullback. Although on the weekly here, this is interesting. This is also why I expect a pullback. On the weekly, we have the 52-week moving average crossing the 100-week moving average, which should cause the Russell 2000 to take a hit and pull back. I don't know how far it'll pull back. At least probably pull back to 1,500. Tesla, real quick. So Tesla's breaking out. There's major resistance up anywhere between 260 to 280. I do not expect it to break past 280. And I will be looking to short it up there. And for the private members, we'll keep our eye on it. This is GM. GM's probably going to pull back with the market, create a nice triangle, giant triangle. You could see it, right? The more you guys watch me, the more you're going to start picking up on this stuff yourself. Something like that, right? Oh, this doesn't look right. Like that. Here's Deutsche Bank. Alright, so I forgot to say in my last video, I'm not shorting Deutsche. It would have been a good short if you did, but I'm not shorting it. It's too dangerous. Do you want to know why? Well, if we go to a weekly chart, look at this. This thing went from in 2007 from 140 bucks to $7 now. It would have been the short of the decade, right? But when something's fallen this low, it's dangerous to short it because any good news will shoot the price up by a lot instantly, back up to 10 bucks or something, and your short will get eviscerated. Your downside potential is not worth the upside risk because it could seriously rally in a really big way. As you can see, it did right here, right? This was a decent move to the upside as well. Well, now it's probably oversold, and any good news or anything or bailout or whatever will shoot the price up. And yeah, it could go to zero, and you would make a lot, but in my opinion, I don't short something that's gone from triple digits to single digits. It's just too risky. In my opinion, I don't do that. That's like a golden rule. All right. Let's start talking about gold. So I'm going to talk about a discount because, I'll talk about that in a second. Here's the weekly on gold. It's, oscillators are up there. They're in overextended territory. But the fundamentals override oscillators, all right? Also, huge cup and handle. And I said this was going to, I was expecting some sort of pullback. But I wasn't sure, and I made that clear in my last video. And this testimony, it just shot gold up again. Let's look at the daily chart. So 1400 is acting as major support now, because it's been tested numerous times and it keeps going back above it. Let me make this purple. I should maybe make my support lines green and my resistance red. I'll make it purple. It's too much green and red. Alright. So we could still see another little sell-off maybe tomorrow or rest of this week and then revisit 1400. Or this thing's going to just keep shooting higher and higher. So here we go. resistance at about 1427 on gold. So this is how I'm going to look at it. If it breaks back above like 1427 or really 1430, it's probably going to, we're going to go to like 1400, or we could start going, you know, we could take off here in a big way. And we're definitely in the new bull market for gold and silver, guys. It's no doubt in my mind. If we break below 1400, so major support, and I've already done this, it's like at 1360 because there's a Fibonacci. It's not on this chart, it's on another chart, but I remember, so. And you're lucky if it falls to back. If they get smashed it back down to 1360, you're lucky. That'll be the ultimate buying opportunity. But right now, I don't know. Right now, this is neutral zone from 1400 to 1427. That's completely neutral. Falls below 1400, then 1360 is on the table. Goes above 1427, 1430. Give it a little leeway. It's breaking out, and we're going to 1500. Probably real quick. Let's take a look if there's any resistance above 14. Where the resistance is above 1400 real quick. All right. So there's like no resistance until, wow. There's no resistance till 1600, guys. So gets above 1430 and starts running. It could run easily to 6. And there's really no resistance. No, there is. Somewhere between 1540 to 1600. Probably 1600 is the major resistance. No. Okay, it's 1580. So the next major resistance is 1580. And it could do it. I'm going to give you guys another reason why. It's not just the fact that all central bankers are printing money like it grows on trees, or I don't know, what's a good analogy. But it could rally up to 1580 quite quickly, like maybe in a month or 2 months, something like that. And why is that? It's because of this. Where is it? It's because of the gold and silver ratio. So every time, let's move this a little higher. Every time the gold and silver ratio gets above 75, you get a huge bull market in precious metals and in gold as well. We're at 93. So once they can't stop the manipulation with silver, and silver breaks out, that's gonna shoot gold, like in a big, shoot gold up in a big way, and silver is really gonna take off. And you guys have to understand something with gold and silver. Silver, when silver's shooting up in price, gold always goes up with it. Now, if gold trails silver, meaning it's not shooting up, it's not going up in price prior to silver moving up. So let's say silver shoots up to $20 and gold doesn't really move much. Gold will then shoot up as well soon after. Now, even if gold doesn't go up and only silver goes into some crazy bull market, your mining stocks are still going to go up. That's because I wouldn't say, well, yeah, most or a lot, at least 50%, something like that, of mining stocks, they mine both gold and silver. because most mining veins and ores have both metals and other metals. And why is that? All right, I'll explain it real quick. Gold and silver was created by a supernova star implosion. So when a star, like our sun, implodes on itself, that insane amount of pressure that can't be replicated on Earth creates gold and silver. And then the gold and silver, then it implodes, it does a supernova, and then it explodes outwards. And then you get a ton of gold and silver flying through space. And then the gold and silver hits flat Earth. No, I'm joking. All right, no, it hits Earth. And thousands of years ago, when Earth was still like molten lava, mainly, it was like the crust of the Earth was still just molten lava, the gold and silver hit the Earth. And the gold and silver went into the molten lava. And then the way the molten lava cooled, and it created the crust of the Earth, the ground we're on right now. When it was molten, it was liquid, gold and silver somehow, with the pressure of the crust solidifying and becoming solid, gold and silver kind of come together. And they create these veins in the crust of the Earth, like the veins in your arm. It's weird. It's hard to explain. So, or it's like tree roots. That's what it looks like. The veins for these mining, when you mine for gold and silver. And it's very scientific. So I'm going to stop. But if that makes sense, that's why a lot of these mining companies will always come across both. All right. And that's also another reason why gold and silver are very pegged to each other. So they both go on to go up in price and value together. So listen, silver, eventually, when silver breaks out and goes to like $20, actually, once it gets past $16, it's over. It's over. Like there's no... we're in full-blown bull market in gold and silver. Let's take a look at a weekly chart real quick. And yeah, I mean, listen, guys, look at this. This is beautiful. Look at this consolidation. Consolidating. It's like a spring winding up, and then the pressure is gonna break out, and it's gonna just shoot up. Boom. And once the price gets above on the weekly, $17. That's it. 17.1. Let's be a little more conservative. 17.4. Once the price of silver gets above 17.4 an ounce, it's game over. They cannot control it. It's the full-blown bull market. All right, guys? So look, and you should be accumulating physical, not just stocks, prior. You should be doing it right now. But once it's gone above 17.4 an ounce for silver, you know you've ran out of time for sure. In my opinion, I could be wrong, but that's what I believe. All right, because that's when the price is above my blue equilibrium line. Let me zoom in. See, once it breaks above 17.4, it's game over. Who knows? All right. So, yeah. Also, the ETFs, the gold silver ETFs, they've been taken off. And I made a call a couple weeks ago for the private members. I'm like, listen, I'm buying this 3X ETF, and it's really working out. Like it's working out pretty well. All right. So last week, my last video, I gave you guys a discount because of my own greed, because I want to buy more mining stocks and physical. And a lot of people bought the report and the data and my newsletter and joined the private group. So I'm going to extend it. I'm going to put the promo link in the comment section below this video. 10% off, and that's the most I'm willing to go. once the price really starts taking off, I mean, I get charged way more, and there'll be way more people. Listen, guys, we're really early. The only people buying is smart money right now. When the retail investor comes into the gold and silver market, gold will already be past $2,000 an ounce. So imagine. All right. Smash them likes, leave anything in the comments section, and please share my video, especially for my MMG Invest YouTube channel. It's the only way it grows. That thing is not growing at all. And I need people from WolfPack Crypto's YouTube channel to go over to the MMG Invest YouTube channel. I need to get it above 1,000 people. I'd really appreciate it if you guys could do that. It takes like, what, 15 seconds? Just type in MMG Invest on the YouTube. Then you go to the channel, go to one of my videos or whatever, and then subscribe. And then hit that bell. All right, guys? Yeah, I answer your comments in the comment section or your questions. And until next time.